All right, then it's time for Blockchain Mastery Podcast. My name, once again, is Titilayo Oyinsan. Thank you so much for joining us. Let me adjust my microphone just a bit, as I like to do. I need to take that sound down as well. All right, then we are ready to begin. It's all about blockchain technology and the opportunities and possibilities for the future. That's what we discuss on this particular podcast. And we have the opportunity to explore the forefront of blockchain tech and its transformative impact on various industries. Uh, Obviously, when it comes to blockchain as a whole, as a technology, there's only so much you can share in a little podcast, but we do what we can to give you bite-sized doses of information every single time you see us. Today's topic is fascinating, I have to say, blockchain scalability solutions. We're exploring layer 2 protocols and side chains today. Let's just give you a little bit of a background. Now, scalability has been a major bottleneck for blockchain networks like Bitcoin, like Ethereum. Now, as these networks grow, they face increasing transaction times and higher fees, which can impede their utility and user experience. Now, this is where layer 2 protocols and sidechains come into play. Now, layer 2 protocols are sort of built on top of existing blockchain networks, and they aim to increase their transaction capacity without compromising security or the decentralization, which is what made it essentially fashionable for most people in the first place. Sidechains, on the other hand, are separate blockchains which run in parallel to the main chain. They can operate independently, but they're tethered to the main chain through a two-way peg. It allows assets to move between chains. So throughout this particular episode, we have a guest who's willing to give us a little insight into this. We have Damilare Aregbesola. He is going to help provide insights into the current state of blockchain scalability, some real world applications of layer 2 protocols and side chains, and of course, the future of scalable blockchain solutions. All right, then. You're wondering who he is. Let me see if I can give you a little background into who he is. Now, Damilare, I'm talking about, he has transcended career borders from project management to developer marketing. Now, after years of gathering experiences ranging from the capital market, blockchain, Web3 space through digital entrepreneurship, he's also enabled organizations and SMEs tap into the digital space and the numerous opportunities it offers through digital marketing and project management. His team actually produced West Africa's first digital stock exchange, Factbook, for the Nigeria Stock Exchange. Believe me, this was featured on CNBC, and it even sold ad slots on the book to about 40% of publicly listed companies, which means they had a solid buy-in. They built and nurtured strong relationships with C-suite to make this happen. We'll be picking his brain on how he did that, possibly, but not until after we get to the nitty of today's topic. Hello, Larry, are you there?
Yeah, I am here. Hi.
Hello, Damilare, can you hear me?
Loud and clear. I can. Can you hear me?
Okay, so we might be having some connection challenges. I'm going to try and figure that out from my end as well. Let's see if I can change sources of internet here as quickly as possible. Let me see. Can you hear me loud and clear, Damilare?
Yes, I can actually. I can hear you loud and clear.
All right, so I lost you for a few seconds, but you're back now, loud and clear. All right.
Titi, I think I've lost you. Nigeria and its connectivity issues. Hello, Titi. So I think we've actually lost Titi for some minutes. Okay. Pending when she'll be back. I think I just have to take it from here. And just kind of give a brief intro into my personal life and my professional life. I think we can actually use that to while away time till Titi comes back. And so, briefly, my name is Damilare Aregbesola, or everyone just calls me Dami, Demi. And so, I've actually been opportuned to work with notable companies in the space, in the blockchain space. Well, I actually started my career, my professional career, from the Nigeria Stock Exchange. Um, Kudos to Titi for giving such brief but detailed background about me. And so I actually started my career life, my professional career, in the Nigeria Stock Exchange, where I was working closely with the market administration units and also corporate comms department. And our goal was just basically my job, my responsibility was just basically to be the middleman between the Nigeria Stock Exchange and the 150 publicly listed companies on the stock exchange. And so basically, I was just there advocating for these companies to the Nigeria Stock Exchange and also advocating for the Nigeria Stock Exchange to these companies as well. Okay, yeah, I think this is back.
Oh, wow. Okay, yeah. So I'm not sure where where you lost me or where I lost you, but I am back. Thank you so much for holding it down for me, Damilare. Welcome
Yeah,
back.
sure. Yeah, sure.
All
Thank you.
right.
Thank you so
So
much.
should I start from the top? Should I start from the top? Should I?
Yeah, yes, yeah. Go ahead.
All right, then. I know you were probably already giving us a little background into how you started in the blockchain space. That's where you started. And I was hoping that you could give us a little bit more information about how you got involved with Web3. Talk to us.
Yeah. Yeah, sure. So before you actually joined in, I was kind of giving a brief background into my professional life, starting from the Nigeria Stock Exchange, the second largest stock exchange in Africa, and basically I was just there working with the corporate comms department and also with the market administration unit. And basically, we were just my main responsibility there was just to be the advocate of the Nigeria Stock Exchange to publicly listed companies and also the advocate of public listed companies to the Nigeria Stock Exchange. Basically, I was just there as the middleman working between the two of them. And so I actually got to know about crypto and the blockchain in the year 2020, the year of the Lord 2020. And so I actually started by trading on Binance. That was I think for most people that was actually where we all started. And so whilst doing that, I worked with the Nigeria Stock Exchange in 2021, and so I had already started dabbling into airdrops, shit coins, meme coins, NFTs on Binance, and also in the DeFi
You did
space, and
everything. You tried your hand at everything.
every single thing. And so in the year 2021, after working with the Nigeria Stock Exchange for some months, I actually resigned, and that was because of some reasons that I might not be able to actually fully mention on this show. But yeah, I actually just saw the flaws of the capital markets firsthand, and I just kind of decided to go into the blockchain space full time. And so after leaving the Nigeria Stock Exchange, I actually worked with a few of my friends. They were actually building a project of their own on the Binance Smart Chain. That's also a layer one on its own. But I actually got my big break in the blockchain space when I actually got in contact with blockchain.com wallet. So I'm sure the OGs
Yes.
on would actually
Yes.
blockchain.com wallet.
That was the
Exactly.
first one, the first most trusted wallet ever. It felt like you had your own access to the blockchain itself. I don't
Yeah.
think people even thought of it as a brand, they thought of it as just access to the blockchain. and the only source in the beginning of access to the blockchain, until a lot of other companies started developing wallets around different coins. But you've had an interesting journey because you followed through, and then you as you called it, you got your big break, right? And you realize all the opportunities that are bound in blockchain solutions. But let's talk scalability now. Let's even break down what blockchain scalability actually represents, and why it's important.
Yeah, so basically the blockchain has three main problems, and that is what we actually term the blockchain trilemma. And so one, decentralization; number two, scalability; number three, security. So the whole meta of the problem is it's not possible for a blockchain network to actually tick all of these three boxes. So if a blockchain network is actually focusing on being decentralized, like Ethereum, then of course it would actually be slow and not fast enough. But if a blockchain network is actually ready or willing to trade off decentralization for scalability, then of course it can be very fast, like as fast as lightning, but it cannot be decentralized. It will be trade off decentralization for scalability and security. And so that is what really the blockchain trilemma means. It means a blockchain network cannot tick all of those three boxes, cannot have decentralization, security, and scalability. And
So
so
is that right now? Has anyone actually achieved? Who's the closest to achieving the trio?
well, I think for now, layer 2 is actually the closest to that.
Okay,
And that is
Solana.
because yeah, so Solana is a layer 1, not a layer 2.
Oh, it's
You
still
understand?
layer. Okay, okay, all right, got you.
Yep. It's a
Fantastic.
layer 1, not a layer 2. Solana is actually there trying their best. They're trying their best and getting close to that point. But when it comes to decentralization and having the 300%, no one has that yet. No
No
blockchain
one.
network has that. Yeah.
Okay,
And so
fantastic.
the most decentralized network to date is currently Ethereum. We all know
Mm,
Ethereum, the
yeah,
slow the slow
yeah.
decentralized network where we all transact.
But it's also considered premium. It's also considered elite. If, for instance, you need to do a very large, heavy transaction, you're probably going to lean towards using Ethereum network than another. Am I right?
Yeah. And that's because of the decentralization factor. So people trust Ethereum. Do you understand? It's like I'm not talking down on this new fintech apps, but I just love to give analogies so people can actually understand what we are saying in the blockchain world. And so it's like the OG banks. I don't want to mention names, but when I say the OG banks, we all know the OG
Yeah,
banks, and we have
yeah.
the new school banks, new school
Mm.
digital banks. Now, Gen Zs and I think everyone actually love to use the new school banks because they're actually very fast, like lightning. They settle transactions very fast, and also the UI. So when I say UI, I mean the user interface
User
is very
interface.
nice. Do you
Yeah.
understand? So I can
Flashy.
open my bank. Yep. So I can open my bank app any day, anytime, and send out money I need to go. You get, and even if it doesn't settle, they reverse it back for me. You understand? But you would actually agree that the trust is not 100% when it comes to those banking apps because we all know there is a point in time where these banks can actually collapse, or the CBN can come out and say they've banned some of these banks, and so we all know our money in it
Mm.
might disappear overnight. And so, yeah,
We
please,
don't put
please, please.
all our money in there. We don't put all our eggs in those baskets. We always still shift it to one of the OG banks. That's what you're
Exactly,
saying.
exactly,
Okay.
exactly. And
All
so
right.
that is the same psychology when it comes to blockchains. Do you understand? We have the new L1s. So when I say L1s, I mean layer one networks, and we also have the new L2s as well. Do you understand? But when it comes to putting or transacting large scale transactions or premium transactions, like you said,
Yeah.
everyone goes back to Ethereum.
Well, true. So now this, you've mentioned one of the issues. No one has been able to provide those three. Um, But are there other challenges that these blockchains are facing, especially with regards to scalability? Because I remember there was that either or, make the token or coin more flexible, make it able, create it such that it's able to do more things, or create it such that it's more secure. There was always that debate. Even with
Okay.
blockchain, with the first halving, then some people were of the school of thought that, hey, it should be more secure, but some were of the school of thought that Bitcoin should be able to buy me flight tickets and also buy me a can of Coke, should be put into a vending machine, and to do that, it needed to be more flexible. So let's talk about the main challenges that these blockchains have, or rather what they're facing when it comes to scalability.
Yeah, so basically, when it comes to scalability, like I said, there are kind of trade-offs that you have to do to actually achieve scalability. So, for instance, like I said, no blockchain network has all 300%. So it's either you have decentralization 50%, scalability 100%, and then security 50%. So when we say scalability, we just mean being able to do transactions or perform transactions at lightning speed. Do you understand? So very fast, and it settles very fast. And that is what scalability means. Apart from that, that is one side of scalability. Another angle of scalability is basically doing such transactions at scale. So we are saying we want to bring 1 million, 20 million, 100 million people, 500 million people, 1 billion people on chain, doing such transactions every single day at scale. So, to be very, very honest, there is no blockchain that can actually, currently, none that can actually allow 1 billion people perform transactions at the very same time. Currently,
Wow.
there is none.
None.
Exactly.
Yeah. So
Exactly.
there
And so,
has to be a queue. That's why there's always a queue. I can remember with Ethereum, you could, on some wallet apps, you could actually pay for faster transaction times. I'm not sure if that's still happening now with what's happening now with Ethereum. I hear that the transaction speed is better than it was before, but I feel like it's because a lot of people just decided to shift away. There was less pressure. It wasn't that they did something different. But now, let's talk about layer two
yeah.
and those new protocols then, and how they are sort of helping with these scalability issues. They've not solved the problem yet, but they're helping. Am I right?
Yeah, of course they are. They are, and they're actually a number of them doing great things in the space. So when we say layer two protocols, like you said, they are built on Ethereum to just make Ethereum cheaper and faster. So Ethereum on its own can actually process around 14 transactions per second. So when we say 14 transactions per second, we mean in a second it can just settle transactions for 14 people. And so when you compare that with Visa or MasterCard. MasterCard and Visa settles around 2,000 transactions per second worldwide. And so that's why you can actually use your bank card in an ATM, and you request for money and it comes out. Because that scalability is there, 2,000 transactions per second. So comparing that to 14 transactions per second, of course, there is no way Ethereum stands a chance. And so that is actually why layer twos were born. And there are actually a lot of them right now. Layer twos are just basically networks, blockchain networks built on Ethereum to make it cheaper and faster.
Hmm.
So those two goals. Now they are
Do you have
actually,
examples? Give us some examples of those apps.
yeah, sure. So Base is one
Okay,
example.
base.
Exactly. So we all know Coinbase, right? And if you don't know
Yeah,
Coinbase,
sure. Sure.
Coinbase is
You are
one of
probably living under a rock at this point if you don't know Coinbase. Yeah.
so Coinbase is one of the global names in the industry, and Base is actually a layer two that they incubated. They actually gave birth to it. So there's a reason why I used incubated, because they gave birth to it, but they don't control it. Do you understand? So it's a layer two given birth to by Coinbase, and it's actually still pushed by Coinbase to just make Ethereum cheaper and faster. There are also other ones as well. There's Polygon. I've actually worked with Polygon before as well. Polygon POS is actually a side chain. And I think that's actually very interesting because layer
Okay.
two protocols are actually different, a little different from side chains. And
Okay.
if you actually want, I can give the different examples.
Please go
If you
ahead.
want me to, yeah,
Please go
perfect.
ahead.
So layer 2 protocols, like we've actually established, they are built on Ethereum to make it cheaper and faster. But
Yeah.
side chains are actually parallel chains that are built on their own. So they are not built on Ethereum. Do you understand? They're
Okay.
actually built on their own. So let me give a very good analogy. We all know there are various types of transportation. There's road transportation, there's transportation by air, transportation by sea. Do you understand? But now, when it comes to transportation by land, we actually have roads that we
Sure.
use, of course. Now, cars go on those roads. But now, apart from the roads, we also have the railway transportation,
Sure.
where trains actually go on rails. But now, those rails are actually built on land. Do you understand?
Sure.
So it's like a secondary transportation system on land, built on land. Yes, that actually makes transportation of goods and services easier and faster. You understand? So you don't
So
get
it
to
has road. It has
yes,
less traffic. It
yes,
has its own rail, meaning its own network, essentially, right?
yes,
Which makes it less susceptible to, hitches or glitches along the way. But it doesn't mean
exactly.
that it won't have hitches or glitches. Sometimes it could derail.
Of course, of course, and that also happens in the
Ah,
blockchain space. Do
okay.
you understand? And
Mhm.
that's major difference between layer twos and side chains. Do you understand?
Okay.
So side chains are actually built on their own with
Yeah.
their own infrastructure from the ground to the top. Do you understand? But
Yeah.
they just have a very seamless communication with the parent chain. So in this case, Ethereum. Do you understand?
Okay.
And an example of a side chain is the Polygon POS. I'm very sure Polygon is actually kind of popular to an extent, and so a lot of people might know that. And the Polygon POS is a side chain because it isn't built on Ethereum, but it actually helps Ethereum because there's a seamless communication between Ethereum and Polygon. So if you have assets on Polygon, you can easily bridge them to Ethereum and bridge them back. Do you understand?
Right.
But when it comes to layer twos, like Base, layer twos are actually built exactly on Ethereum. Do you understand?
Okay.
So anything you do on layer twos, it actually settles back on Ethereum.
Okay, so I know you've touched on NFTs before. You've worked on NFTs before. You went quite in deep with those as well. I know that that's also built on the Ethereum block. Well, it started out being built on the Ethereum blockchain, the likes of OpenSea and the rest. But I'm wondering how to a layman, how would I describe the difference between the opportunities that NFTs gave us in terms of the contracts, smart contracts, in terms of making sure that people's property still belongs to them, no matter what's happening with the property along the line, no matter where it goes, you can still identify the owner, etc., etc. Because Ethereum has been known to be that platform you use when you want to be sure that a transaction is going to go through, or you want to be sure that an instruction or a command is going to go through and not be, I think the term is immutable. Yeah. So if you want to be sure it's immutable. So I'm just trying to give anyone listening a little insight into the differences. Go ahead.
Okay. So for NFTs are like a product of the blockchain. So the blockchain tech, of course, is the infrastructure powering everything. But NFTs, crypto tokens, meme coins, shit coins, all of these are like products of the blockchain technology, but they are not really. They are just products that are actually ensued using the blockchain. Do you understand? And so, for
So they're
instance,
not,
when we say, please come again.
so they're not protocols.
No, 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 no. NFTs are not protocols. NFTs are just tokens. So NFTs really stands for non-fungible tokens. So the same way you have the Ethereum token, the same way you have the BTC coin, the same way you have the Solana token, Solana coin, the same way you have Matic, all of these coins, NFTs are also a token on their own. Do you understand? But the difference between them and
Mhm.
these coins I've mentioned, like the popular ones that we know, Solana, Matic, Bitcoin, Ethereum. The difference between NFTs and this token is These other tokens, BTC and the rest, they are fungible. So when we say
Mm.
fungible, it means they are very identical. If I have one BTC in my wallet
Yeah.
and you also have one BTC in your wallet, if you actually compare the hash, so when we say hash, I mean the code that actually makes it BTC.
Representative. Yeah.
You understand? It's almost similar. There is no difference. There is no way we would. There is no unique identifier that identifies that my BTC is different from yours. Do you understand?
So it's
So
also of the same value
yes,
at every point in time. Okay.
yes, but they are fungible. Fungible really means there is no unique identifier. They are the same, very similar. Do you
Okay.
understand? But when it comes to NFTs, non-fungible tokens, they are unique. And so that is why we call them non-fungible tokens. So that means they are unique, they are not similar. So if I have an
Mm,
NFT, my NFT is uniquely different from your NFT, even if it's
mm.
of the same brand or
Yeah.
of the same anything can be an NFT. That's something you should know. So we
Yeah.
can actually mint a picture of me and you right now, or this
Yeah.
entire recording, and make
Yeah.
it an NFT. Do you understand?
Yeah.
So even if two people actually mint this same recording, it is still very different. It will be very,
Mm.
very different. So that is why we call them non-fungible tokens.
It's so interesting. I actually had a conversation with someone on NFT wine. So wine bottles, premium bottles of wine that are like 60, 70 years old have been turned
Mhm.
to NFTs, and they are still in the wine cellars where they belong, because that's where they can be stored at the accurate temperature, etc., etc. But they are on the blockchain. They're
Yeah.
being uh, uh, what's the term? The
Represent.
value is being exchanged on the blockchain from
Yeah.
owner to owner, even though the bottles do not leave the
The
wine
seller.
cellar. It's
Mhm.
amazing, amazing stuff. Wait, let's leave NFTs for a bit. Let's come back to layer two now. You mentioned Lightning Network some time ago. Do you think it is the solution to enhance scalability? Do you think that's true?
Okay. So can you come again? I didn't really get
Okay.
the thing you
So
mentioned.
we mentioned the Lightning Network some time ago, not too long ago, and I know that it's a layer two solution. But do you think it really works to enhance scalability?
Yeah. Okay. So the Lightning Network basically is on the Bitcoin network now. So like we actually said, there's Bitcoin, there's Ethereum, and there are other layer ones as well. So the Bitcoin is a layer one network, it stands on its own. Ethereum is a layer one network, it stands on its own. And so layer two networks are networks built on these layer ones to make them faster and maybe cheaper to use. So for instance, the two OG layer ones, Bitcoin and Ethereum, they are slow. Do you understand? They were built years and years back. And so
Yeah.
the tech that they were built with is not really very usable right now. And so these layer two networks were built on these layer ones to make them easier and faster. The Lightning Network is actually one that was built on the Bitcoin network, basically to just make the Bitcoin network cheaper to use and also faster. Do you understand? And I think it's actually doing well to an
Mm,
extent, but this space is still very, very new. I think we are
mm,
just, I think, 16 years into this whole industry. And so there are a lot of infrastructures, a lot of ideas being bet out every single day. And so I think it's still very early to say we've won or we've
mm.
actually gotten there. But I believe with all of the technologies and the infrastructures we have, and we are still churning out every day, the future is bright.
I'm still thinking about this security issue, and I know the security issue is one that everyone wants to talk about. Is it secure? Now you're saying you want to build another layer on top of another layer. You people are expand. You people are just changing. Maybe you people said this. Maybe you said Bitcoin is the best. Maybe you said Ethereum is number two. So why are you building? There's just so many questions, so many perspectives. But from the security implications of using layer two solutions and side chains, let's just be very honest and transparent about it. What are the risks?
Okay, so for layer twos, and that is one of the differences or one of the features that actually makes layer two very, very different from sidechains. Now, like I said, the side chains are parallel chains. They were built on their own, from 0 to 1. They just have a seamless communication with the layer one. Do you understand? So for that, the security is not as much as the layer twos that
I'm
are
sorry,
actually
could I
built on
ask you to
Ethereum
take that
directly.
again?
Now, you see, when it comes to smart contracts, there are a lot of layer ones out there. Let's be very, very honest, like you said. There are new layer ones out there doing phenomenal stuff. I wouldn't demarket them. Solana is doing amazing stuff. There's also Say Network, there's Sue Network, there's Aptos Network. All of these networks are layer ones doing absolutely beautiful stuff. But going back to the example I used about OG banks and new digital banks, do you understand? The trust is still on Ethereum because people know Ethereum has been there for, I don't know, 6, 7 years or 8 years, and we've seen or we've recorded no hiccup on this network before. And so that is why actually layer twos or companies like Coinbase are actually doing all they can to actually make sure Ethereum works by building layer twos. Now, for security, when it comes to layer twos, if you have your funds on layer two networks, no matter what happens to layer two networks, you can always still withdraw your assets on Ethereum. Do you understand? And that is the beauty of layer two protocols. So if it's a layer two directly built on Ethereum, everything it does is doing it and actually settling back on Ethereum. And so if anything happens to your funds or any hiccups with the layer two network, you can still always withdraw your funds from Ethereum itself, going through different means that we call the fraud proof and escape hatch. All of that are so technical, but the security guarantee is if you have your funds on layer two protocols, you can actually withdraw them from Ethereum if anything happens to the layer two. Does that answer your question, Titi?
And so I heard everything you were saying there in bits and pieces. I'm going to ask you just to take the last few sentences you gave us one more time because I lost the network there. So I don't even have a follow-up question for you right now. I'm so sorry. The internet is doing what it does. I'm so sorry. Talk to us.
Yeah, sure. Of course, we're in Nigeria anyway. So, like I said, for security concerns, layer two protocols on Ethereum are built on Ethereum. And so that means everything you do, you are doing it on Ethereum. Do you understand? And so whatever assets or funds you have on layer two protocols, you can always withdraw them from Ethereum if anything happens to that layer two. Do you understand?
Okay.
And so, like the example we actually gave of the OG
Yeah.
banks and the new tech banks, do you understand? We know Ethereum has been there, was the very first smart contracts platform to actually exist, and because of that, it has the trust of so many people, both companies and retail users alike. And so, putting your funds there's a lot of reasons why companies like Coinbase and other companies are actually building layer twos on Ethereum, because they actually know Ethereum has that trust and that security guarantee. It has been there for years. And so for layer two security, whatever funds you have on layer two protocols, you can always withdraw them from Ethereum itself through different means that we actually give technical names in our industry, called escape hatch, the fraud proofs, and all of that.
Okay. Fantastic. Okay, thank you so much for breaking that down. But there's another term I've been hearing, cross-chain bridges. Is that what you're making reference to here? Cross-chain bridges, communication between side chains, main chains, and the like. You need to break that one down for us as quickly as possible. We are pushing it on time. Would you believe over 30 minutes has gone by?
Yeah, sure. I'm actually enjoying this. For cross-chain bridges, we have, so for the side chains and the Ethereum, it's still similar to that. So we have different chains in existence right now. We have Ethereum out there, we have Solana out there, like I mentioned, we have Say Network out there. Let me blow your mind. We have more than 100 blockchain networks in existence today. Do you understand? And now people have, like, they are users on all of these 100 blockchain networks. Do you understand? But these blockchain networks don't communicate. They don't communicate because, they are actually islands on their own. Do you understand? So it's like having fragmented amounts of money on different blockchains, and there's no way they can communicate with each other. And so that is not the future we hope to have. I don't intend to have some funds on Ethereum, then some funds on Solana, and I can't actually get my funds on Solana back to Ethereum. Do you understand?
Sure.
And that is where cross-chain bridges actually come into place, where they actually help you to bridge funds from one chain to another.
Are these
They are actually
are these the exchanges? Okay. So I always felt like the exchanges acted like a sort of like a bureau de change sort of situation, where if you need something, you go to these exchanges and give them what you have and take what you need, sort of like a central station. But
Mhm.
explain how cross-chain bridges are different.
Okay. So for centralized exchanges, it's very simple. They are like the fastest way to actually get into crypto. So I have my money in Naira. I want to buy Bitcoin. I want to buy Ethereum. I can just go to Binance or go to Bybit or go to KuCoin and actually put my money there and actually get it in dollars, and then I buy what I want to buy. But cross-chain bridges, their main purpose is to just move funds from one blockchain network to another. So you cannot go to a cross-chain bridge to go and buy Bitcoin or Ethereum.
Mm.
No,
So
their
you have
own
buy
main.
or sell. It's just exchange.
Yep, it's just moving. So let's use the word
Mhm.
moving. It's just
Okay.
moving funds from one blockchain, one island to another island. So
Okay.
yeah, it's very simple. So it's like just a bridge.
So there was something that interested me in blockchain years ago. I think it was on Trust Wallet, or was it Token Pocket, that I got introduced to decentralized applications for the first time. dApps, MetaMask, and I think there's so many of them now. So many of those wallets that have access to dApps now. But I feel like layer two solutions and sidechains might affect the the user experience of dApps at this point, because I don't know. We're just getting used to having access to a browser within a wallet, and then suddenly we're, hearing that there's another layer being involved in here. It's getting very complicated. What do you say to that? The user experience based on our experience with decentralized applications. How does layer two affect this?
Okay, so to be very, very honest, the user experience in the blockchain space is currently very, very bad. Like
Hmm.
very bad. It's shit. Okay, and of course, one thing that I just always say to console myself is we are still very early. You understand? And we are still trying to figure things out. But when it comes to specifically answering your question, how layer twos actually complicates this, I don't think layer twos complicates them so much, particularly for new users. So for new users coming into the space fresh, they don't need to know or communicate with Ethereum, the layer one. Do you understand? All they just need to know is I'm actually getting my funds or doing everything I want to do on a blockchain network. They don't even need to know if it's a layer one or a layer two or a layer three or a layer four. All they just need to know is I want to get something on chain, on the blockchain, and I'm actually visiting Base, this layer two. I'm actually visiting this blockchain network, get what I want to get, and I get it back to the centralized exchange, centralized stations like Binance and KuCoin.
Okay.
Do you understand?
Okay.
Yep.
Fantastic.
So the only headache is for people who actually want to go down the rabbit hole of trying to communicate with Ethereum or communicate with all of the stacks on the chain. Do you understand? But for a retail user who is just coming in to just get
Yeah.
something on chain, you can just
Yeah.
easily go from your centralized exchange, which is Binance, to a
Yeah.
layer two and come back.
All right. Now, Adam Larry, I would love to continue picking your brain like this, but we are far spent on time. But you have to pop back in to the Blockchain Mastery podcast one of these days to share one more time.
Yeah,
Please make time for us.
yeah, sure, sure. I would love
Any
to.
final thoughts? Final thoughts on scalability before we wrap up?
So one thing is just it's one thing I just want to say is no matter the challenges we face right now, the internet didn't get to the point it got to today by just in just one night. Do you understand? It got there in years, and it took years of actually building, of refining, of improving and making things that didn't work. And so that is the same thing with the blockchain. The blockchain is just 16 years old, and we have around 1 million daily active users on the blockchain. That is very little when you compare that to the 8 billion users we have currently. So there's still a long way for us to go. There's no need to rush. Let's just take things one step at a time and make sure we solve problems with the blockchain. Like, I'm very particular with that. We wouldn't get the blockchain to be used by everybody if all we do is airdrops, meme coins, shit coins, and all of that. We wouldn't get I tell you, we wouldn't get the CBN and the government to actually come in and accept the blockchain through TapSwap or through Notcoin and airdrops. We would get them to actually accept the blockchain and give good regulations on the blockchain if we use it to solve problems like cross-border trade. Till today, I cannot still send money to someone in Ghana, someone in Egypt, someone within Africa. Do you understand? And so let's actually use the blockchain tech to actually solve problems and not gamble or chase airdrops. It's just that's
All right then. So you said solve problems. And those who chase airdrops, they're solving a particular problem that they have, and that's the need for
yeah,
money. Then
yeah, sure.
everybody needs that extra. And who doesn't like free money? All I have to do is tap a few things on my phone, and then suddenly someone is giving me some change. Or more at this point, especially with the situation, the economic situation in the country, you can't really blame people for wanting to go ahead with that.
Yeah,
But
sure.
that's another conversation for another day.
Yeah.
Because there are also risks getting involved in that as well. But Damilare, if you're just joining us, Damilare has an amazing transcending career that has the market blockchain, and he's enabled organizations and SMEs to tap into the digital space and all the numerous opportunities it offers. We're so grateful that you took our time to talk to us today. Thank you, Damilare.
It's my pleasure. Thanks so much for having me. I enjoyed this.
I had a good time too. Thank you. All right. So you heard it here. There was quite a lot of information that was dropped here today on Blockchain Mastery Podcast. And yeah, it did take a lot of time for us to get through a lot of what Damilare and myself were discussing. But that's because it is such a vast concept that is still unraveling every single day, and people are still learning. The term AI has been popping up a lot now, and the truth is, blockchain existed before. Well, AI existed before right now. So, as Damilare said, blockchain is just about 16, 17 years old. So there is still quite a way to go. And it's still early. You can still get in now before the train leaves the station. All right, then before I leave, here's what happened in crypto, the world of crypto yesterday. Now, analysts say that Ethereum's price action could finally outperform Bitcoin in the weeks following the launch of Ether ETFs. Meanwhile, stablecoin user Tether has signed a memorandum of understanding with Turkish crypto platform to promote industry knowledge in America, and spot Bitcoin ETFs recorded 5 days of positive inflows. Let me give you a little bit more insight into the Ethereum news. Now, the price of Ether, as at the time of this particular report, was around $3,353. Now, it looked set to outperform BTC, which at that time was $60,855. Now, this was following the launch of the spot ETF exchange traded funds, that's ETFs, and that was in the US, and that's coming up later this month. Now, analysts are doing all they can to research this, and Bitcoin faces really strong headwinds from upcoming MTGOX creditor repayments, which could see as much as $8.5 billion worth of BTC dropped onto the market beginning this week. Now, in contrast, K33 analysts Vettel Lunde and David Zimmerman say ETF, or rather ETH, stands to gain significantly from a wealth of expected inflows into its own roster of spot ETF products. Now, it's mirroring a similar price action to Bitcoin following its spot ETFs going live. The value of Ethereum has been charting a steady decline compared to Bitcoin for the past 12 months, with ETH to Bitcoin ratio falling to a yearly low of 0.045 as at May 2024. Now, the price is relative to Bitcoin. It reversed quite quickly following the SEC's sudden decision to approve Ether ETS, which surprised analysts and saw ETH BTC tick up to its present value of 0.055 per Trading Views data. You should go, of course, DYOR. Let's do your own research on that one and go and check out what's been happening in the world of Ethereum if you want to find out more on that. Now, with regards to Tether, that USDT issuer Tether, they've signed an MOU with Turkish crypto platform BitGuru to promote crypto education in the country. According to the July 2nd announcement, the partnership is going to enable Tether to develop crypto-focused education programs for the public and private stakeholders in Turkey. BitGuru specializes in crypto assets for the banking sector. Now, it's a connection that will allow Tether to promote peer-to-peer technology in Turkey's finance industry and explore the possibilities of introducing new business lines. Through that partnership, Tether and BT Guru will assess the viability of real-world asset tokenization in the banking sector. The MOU has the potential to provide a solid foundation for the responsible and informed use of digital assets, and it's exciting to be part of this movement. It could promote freedom and educate people across Turkey. And even the Tether CEO, Paolo Adornio said as much. Now, Turkey has emerged as a major center for crypto adoption. According to Binance, Turkey ranks 4th in the total crypto transactions and 12th in overall adoption. All right, then, that's how we'll be wrapping it up on the Blockchain Mastery podcast for today. There's still so much we need to talk about in the world of blockchain technology, and we're going to do everything we can to keep educating, keep informing, keep enlightening everyone as much as we can on the amazing opportunities that lie within. My name is Titilayo Oyinsan, and it's a pleasure being your host today. If you'd like to be on the Blockchain Mastery podcast, maybe there's something you'd like to share or you'd like to contribute, or indeed, maybe you have a project and you're looking for angel investors, for instance, something like that, or you want to base your new SME on blockchain tech, send us an email, dynamitepodcastnetwork@gmail.com. That's dynamitepodcastnetwork@gmail.com, and we will be getting back to you. All right, then, until next time, have a very